Hi, Adam Anderson here, owner of WealthGuard Advisors. We may or may not have interest in you buying or selling the stocks we're talking about today. So read the disclosures at the beginning and end of this video, and remember that past performance is not indicative of future results. One of the things I've been very concerned about is back on October 10th, a Friday before last, we had a sharp sell-off in the market, which last week we really watched for signs of continual selling in the marketplace. And it's been kind of interesting because we saw a day that opened up down and it worked its way up through the day. And that's a really strong sign of a good market. We want to see that opening lower, but working its way up through the day. But then we saw a day that was open up high and work down through the day, the opposite of what we want to see. We don't want to see selling throughout the day and losing the gains. And we also saw a market that went up in the day, down in the day, and ended up back where it started, which we call a doji. So we saw this bifurcation of a battle between the upside and the downside of the market. Not sure which direction it wants to go. So what we've concluded is we're kind of in a sideways market. We saw some good earnings from financial companies, but we saw some concerns about credit qualities. So we're seeing this, tale of two cities, good news, bad news, that's coming out. But ultimately we see earnings that are going up, and that's going to drive the market ultimately upwards. So we're staying fully invested. We're rebalancing to make sure that we're not over allocated to certain things. We're taking profits, and we're just watching to see if there is a trend on the downside, which right now we are concerned about, but we're really seeing signs of a confused market that's just going sideways. Let me turn it over to Blake now.
Thanks, Adam. Yeah, I think we'll just highlight these the last week, 2 weeks here, as really the potential for a change in the trend of this market. We are looking for more follow through days. This obviously last Friday was a huge sell-off with high volumes, but we haven't really seen an exceptionally high follow through day with extra volume. So we're just watching that. And obviously today has been very strong recovery. So just watching it closely, it is a reminder that when we do get good days like today, it might be worthwhile to trim some of the profits off of some positions, especially in more volatile stocks, some of these tech names, AI names that have been driving the market for the last 6 months. It might be worth reallocating some of those profits to other sectors of the market that might be more defensive as this bull market runs longer and longer. That being said, I don't think it's necessary that the market is turning around right away. It does look like we'll get the jobs data in on Friday, and we are expecting the rate cut. Market is pricing in a rate cut in October and probably one more this year. So until things substantially change or we see more high volume sell days, I'm comfortable staying in our current fully invested positions. And now let's talk about some individual positions. I know Adam wanted to talk about the cruise line, so let's turn us back to him.
Hey, here I am on Royal Caribbean's Quantum of the Seas, enjoying a little vacation, but of course, looking at the market daily to see what the kind of action is and what's happening. When we talk about stocks, we talk about buying best in breed. We talk about know what you own. So back in the 1980s, there's a famous investor, Peter Lynch. He ran the Fidelity Magellan Fund, very famous. And he really came up with that philosophy of know what you own. He would look for his friends, family, and the companies that he liked to patronize and look to see what kind of balance sheets and do his homework on them to see if that's something he would like to own. So it's that philosophy of know what you own is really what he kind of coined. So Royal Caribbean is one of the best of the three publicly traded stocks, which are Carnival, Royal Caribbean, and Norwegian. Of them, I feel that Royal Caribbean is the best of the breed. We're here on Quantum of the Seas. My wife's sister, she loves to cruise, and she's been cruising with Royal Caribbean for a long time. We've had we've kind of got on that track with her because my sister-in-law, my wife, wants to go with her sister, so we've gone on Royal Caribbean cruises quite a few times. This ship that we're on right now, capacity 4,200, is filled to capacity. The demographics are really leading this. Baby boomers, Older retired people are looking to, they have disposable income. They want to see places. They want to go do things. They could do that by traveling on a cruise ship. It's pretty strong trend that's happening in the cruise lines. So, about their shares, it fell in April with most stocks. It's come up almost 50% since that time. Over the last 5 years, it's gone up over 400%. Is Royal Caribbean too expensive at this time? I don't know. It's trading at just over 22 times earnings, which is less than what the S&P 500 trades at. So it could be actually cheap in that relative to its earnings. Another thing I really like about Royal Caribbean is that the dividend has been rising consistently. So we have the dividend has risen almost every time that they have an earnings report. They raise it. It's now at a dollar a share that they're paying. So it's gone up sharply. So I feel it's a good long-term stock to own, well-run company, good balance sheet, good earnings, strong dividend. Something to think about. I do own it. I've owned it for quite a long time. And just looking at best of breed, looking at that know what you own story that Peter Lynch was so famous for, it's compelling. Have a great day.
Thanks, Adam. I just wanted to quickly show the comparison that Adam was talking about between Royal Caribbean here at the top in green and red, overlaid with Carnival Cruise Line here in green, and Norwegian Cruise Line Holding here in purple. So obviously, over the last 12 months, Royal Caribbean has performed the best. And I think that's a testament to this best in breed that Adam's talking about when you go through their fundamentals. And if we take this further out to 5-year chart, it becomes quite drastic, the difference between Carnival, Norwegian, and then Royal Caribbean near the top. So I think that's something to pay attention to anytime you're looking to invest in a company that you're familiar with, invest in what you know. Look at some of its competitors to make sure that you're actually investing in the best of breed. Thanks so much for watching. I'll look forward to see you next time.